And good evening. This is the Elliott Wave update for the NASDAQ 100 for Monday, January the 24th, 2022. What an awesome trading day again today. Extreme volatility, both directions being played out. Just an incredible trading day. But where I want to start today, before I jump into updating the actual move, is the importance of the correct mindset. Having a good mindset in place where your focus is not going to be broken by extraneous or outside noise, which often can come from within ourselves. It is a mindset that needs to be ironclad, focusing on the price action, on your trade plan, on moving averages, which is part of our indicator set, on Fibonacci retracement levels, extension levels, an Elliott count, on probabilities, and not on what's causing this, why is someone bearish or bullish, or et cetera, et cetera. Leave that to the pundits. That's nothing but noise, which is going to influence, if not discourage, any trading that you may want to do. These moves were fast, they were heavy duty, they were pushing, and there was money in very large amounts to be made today, regardless of your account size. Small, medium, large, extra large, all should have been in a positive P&L today. The market followed through to the downside and then absolutely crushed to the upside. So let's take a look at what took place. Let me add one other thing before I dive into this. Getting the correct mindset is vitally important. And it is very important to you and to me as traders, so that we can step into the chaos that took place today in both directions without stopping to ask, are you aware, Mr. Trader, of why I'm going in this direction? Do you care why I'm going in? Because I don't. And those breaks create hesitation, create doubt, create fear, create all kinds of emotions that we as traders can keep in check. That's the noise. It takes practice, but it is possible. And until we actually can get into that, then we're not being able to step into what I call the eye of the storm, where there is calm, so that you can see the opportunities, you can see the breaks, you understand what happens when this breaks this moving average, when it breaks that moving average, when it breaks below the support, where is it going? Why are they diving so deeply? Because they're looking for value, et cetera, et cetera. Your answers are there, readily available to assist you in making solid trading decisions. Now, today, on last night's update, I had marked the subminute wave 5 and the minute wave 3 right there. And I felt that, well, we're off to a good start in a 4, and we actually did kind of go up and made a new high above this small high. Let me see if I can open this up. So, of course, it's going to do that. Come on, computer. There. You can see it's kind of clouded in the moving averages, but it went up, and then it kind of came down, and then it went up right there. I went to that slight new high, and then it just started to collapse and go down. The NASDAQ at one point was down close to 700 and is now finishing in the aftermarket up 90. What a turn. I have been talking about how the volatility, when it increases, will increase to both sides. And it's the volatility, it's the speed of the move. And volatility, when it comes to options, it's the amount of premium that's going to go in. but we saw the VIX totally, let me just say, the VIX was, the high today in the VIX was 39. Actually, it's saying 38.94, so let's call it 39. It still finished up on the day, but 10 points lower than its high. It was an amazing day. It was a totally amazing day. Now, where are we? If indeed this count remains valid, this is only just the completion point for that minute third wave within the minor C wave coming down. Now, what this then suggests is this is a minute fourth wave. So where can it complete? Well, Elliott tells us that most often it will complete at the terminus of the fourth wave of one lesser degree. Bang, it's right there. So what's our potential for continuing in this rally? Well, it can continue getting up to 14,858. That also coincides with the 50% retracement level, right? So it's already just about to the 0.382 retracement level, because this is what I put on now, right? From the low, which is 13,706. So we closed on Friday at 14,411. We made a low today at 13,706. Impressive. It was incredibly impressive. And there was no stopping them. It was bang, bash, bash, bash. And truly, during that slide, you just sold rallies. And you could, if you could sit through the heat, you just sold the rally. It was going to go your way and it was going to come in. But if you missed the signs of the turn and you continued to sell, you gave back everything you worked so hard to get in the morning. But I digress. So what we can see happening from here is that it could get up and reach, right now we've got some, I'm not sure what these are. Let me just get out of that. There's part of this that I want to get rid of. This one I want to get rid of. Let's remove that there. And let's remove this here. Come on. There. Okay, so what we have is the market can continue to rally. Now, we have the 50-day moving average, the 50 moving average on the hourly 50 at 15,575, I'm going to call it. And then right above that is the 0.382 at 14,583. That would be pretty reasonable. That would be expected for the fourth wave. So it can get to there and stop. And that basically would touch the bottom end of this fourth wave, right? The bottom of the fourth, that's where it started. So, but the terminus is up a full 100 plus points above that. So we have to allow for that. What it cannot do is break this level, 15,152. A break above that is going to shift things into a little bit different picture and actually bring this back in for me to move the 5 and the 3 up to here, put the 4 there, and this is the 5, minute 5, and the completion point for the minor wave C and the completion point for the intermediate fourth wave. And we are off to the races to the upside. Okay, let me repeat that because I'm not calling it yet. We still have a very difficult week in terms of news, in terms of emotional factors that are going to come into this market. Do not pay attention to the pundits that are telling you they reversed it on Fed anticipation. Really? What would be the good news about the Fed raising rates? That they don't raise it that much. That they come in under what everybody thinks. Oh, that's a bullish sign. So now the spin is trying to tell you as traders, higher interest rates are okay. Not in my book. They never have been. I can't see how that scenario has changed simply because somebody wants to see prices higher. Okay, the other thing, we still have to get through all of the big Titan earnings. That still has to come out. Oh, well, now they're looking forward to these earnings. Really? Because we rallied and everybody came in and bought and covered the shorts. That means that Amazon's going to blow the doors off, that Tesla's going to blow the doors off, that PayPal's going to blow the doors off, Nvidia's going to blow the doors off, Apple's going to blow the doors off, et cetera, et cetera, et cetera. I don't think so because I'm not getting that vibe. But that's going to be told, and so people can believe it and they come in and buy it. That's the noise, folks, into the mindset. Let's stay focused on the price action. Let's stay focused on what the Elliott, the Fibonacci, and the moving averages are telling us. Then the market will be telling us what its intent is. I'll leave the who, what, where, when, and why to somebody else. I want to focus on price action. So no matter what this market does, I will be able to catch the move. I won't be caught wrong-footed because if I am, I know enough to get out. I know where my count is invalidated. I know where my trade would be invalidated. And that's keeping your mindset in the correct place so that you can see this. So for tomorrow, I would expect some follow through here, unless, of course, like last night, Asia, they loved it. Europe may not, because we still have, guess what we got sitting, this big, huge, gray cloud that's forming into a thunderhead that either dissipates or it begins to throw lightning and rain and hail and everything else down on everybody. And that would come on the situation in the Ukraine. The building, the posturing, the verbiage, the threats, the whatevers coming into play in the Ukraine. It is a standoff. Who is going to back down? Right now, nobody. And so what we're seeing is that we're seeing a buildup of troops. We're seeing that the US, via the Pentagon, has already put on standby, I think, 8,500 troops, 8,500 Army, military people, that they may be sent to Eastern Europe. We have the threat of a war, but yet they turned this market around and they rallied it back 700 plus points in the NASDAQ. So do I care why they came in and do it? No. Regardless of what's happening all the way around me, I've got to remain in my mindset that allows me to step in because my technical factors, plus the market, breaking above the 20, told me, grab it. And look what happened. Remember I talked about if it breaks the moving averages on the way down, it's going to create acceleration. Then I point, as it did, here's what happens. Here's what happens. Here's what happens. Well, did I not also include yesterday, the same thing's going to happen if they start breaking the moving averages going up. It's going to create more upside pressure and start this acceleration just in the other direction. The same factor applies to whether you're going up or whether you're going down. Now we saw it going up. And it came up the first time. It was a nice rally at 1 o'clock in the markets. It was a nice rally, got up to the hourly 8. And it kind of got above it, but then I said, nope, not going to work, and it backed off. That's after it had already reached the 0.236 level Fibonacci resistance, hit it on the nose, backed off and dropped back down below 14,000. That was from 14,244, 45. That's where it got to. It got to 48, actually. Then it dropped back down to 13,975, 74. Those are huge moves. So then we get another tremendous rally. So I can already actually, off of the low, ABC. That's what I'm looking for a way forward, an ABC. Do I need to allow for additional? Yep, I sure do. Because I can break this down and see if this is going to be a 5. It has to form 5 waves up off of that low. That's the low of B. then C has to form 5 waves up to wherever it ends. Then I'm going to be more convinced. But at the same time, then it has to hit that resistance and it's got to turn pretty much like it did, start going back low. If we're going to do a 5th wave down. Okay, so here's the deal for tomorrow. I am expecting, unless we get something churning in Europe, that we'll see higher levels. And then our resistance is 14,583, and that runs up to, actually, we've actually got it just below, which is where the 50 is at 14,590. And then, where's the SoCal? Oh, that's the original, 14,043, and then we've got the 50s at 14,574, excuse me. Then we have 83. So let's call it at 574 to 583, with a break there bringing us up to the 50% level, which is at 14,008. Come on, 14,857, we're going to call it. And a break there brings us up to the hourly 200, which is a 15,120. And then we have 0.618 at 15,130. But magic number in between, 15,152, coming just above all of that. So we can get there, but it cannot exceed 15,152. If it does, it doesn't mean anything other than the count as is negated, and it's likely done with the intermediate 4th wave, and we're in the beginning stages of an intermediate 5th wave advance. Okay, so yes, right now we're still allowing for an additional decline, which would then be expected to bring it back down below 13,682 and down into these levels down here. I took that support levels down, but they were 13,336. 336, 330, 86, into that area there, but definitely below here. And it needs to come down in 5 waves. Now that's the downside scenario. And again, if it comes down and it breaks the 20 and breaks the 4 and the 8, expect the market to pick up some speed as it starts to go back down. Because again, it's just tons of traders switching out positions, trading the options and hedging and et cetera, et cetera, et cetera. This makes for fantastic trading, people. It really does. Keep the mindset strong. Keep focused on your price action and trade. Trade with confidence. Trade that you've now watched enough to know that when it starts to break these moving averages, it happens. The acceleration happens. When we start to break support and we drop into these black holes, the acceleration happens. Why? Because who's ever creating that downside move is looking for value to unload what they have to sell. Same thing on the way back up. They're looking for value where we can find the sellers who are going to be willing to sell it. This is just a natural product of the market. The market is always searching for value. Where can business take place? So that's the concept, and this is it in action. When we get into these black holes without support, they're searching. Where is that support where I can unload these futures? And they'll just keep hitting until they're done. Okay, I'm going to leave it there. Let's work on the mindset, get that strong, and use the Fibonacci, use the moving averages, use the Elliott to help guide you, and look at your breakpoints. They will tell you volumes of information about the intention of the market and how it relates to this overall picture. Next update will be on Tuesday, the 25th.